Hello, this is Tim Congdon, Chairman of the Institute of International Monetary Research at the University of Buckingham. This presentation has been given in November 2018, and it's a preview, a sort of quasi-forecast of trends in the banking system, trends in money growth, and a look at how these things will affect economic activity in the world economy in 2019. The underlying theory in what I am about to say is fairly simple. It's that in the long run, the ultimate determinant of the growth of nominal national income, spending, output, is the growth of the quantity of money, meaning all the deposit liabilities of the banking system, as well as the notes and coin that we hold. That's the first key idea. In the short run, the relationship between money and economic activity is much less precise, but in general, a sharp change in the rate of growth of inflation-adjusted money tends to be important for economic activity. So that if, for example, the inflation rate is 2 or 3% and the rate of monetary growth goes from 5% to 10%, then the real growth rate has gone from 2% to 7%, and that tends to boost asset prices, improve balance sheets, and help the economy. I don't deny that, certainly in the short run, we must look at many other things too, but I'm going to focus here on the banking system, money, and so on. And I'll be looking at 6 economies: USA, China, the Eurozone, Japan, India, and the UK. Together these constitute getting on for 2/3 of world output, and therefore give us quite a good feel for what should happen in 2019. Now let's just start with America, United States. You can see this chart is of money growth going back to before the Great Recession. You can see that plunge in money, 2008 and 2009-10, and then this long period of rather stable growth of money, which has been associated also with stable macroeconomic outcomes, steady growth of output, steady growth of demand, with little inflation in very stable periods since the Great Recession in America. I also noticed towards the end, it may be tailing away a bit, or is it? Let's just look at a bit more detail. The last 2 or 3 years doesn't appear to be much the matter. It's surprising in a way, because this has been the period when the Federal Reserve has been selling off the assets that it acquired in the immediate sequel to the Great Recession. The quantitative easing program of asset purchases has been selling them off in the last couple of years. And I and some other people worried this would tend to slow down money growth and then to dampen down the US economy. It hasn't really been happening, but it may be about to happen, because in the fourth quarter of 2018, the pace of these asset sales is moving up to $50 billion a month. And when, for example, the Fed sells off an asset to you or me, I pay for it by making a payment against my bank deposit, and my bank deposit goes down, so the quantity of money in the economy falls. I'm not going to jump up and down about the United States. I don't think there is a big problem there. In fact, of course, economic growth in 2018 has been buoyant compared with the rest of the world, and one can just look at the figures as we go along month by month. Nevertheless, the Fed's asset sales are a negative for US money growth and then for the US economy in 2019. What about China? Now, this chart again goes back some years, and you can see that the general tendency in China over that rather long period of time is actually for a slowdown in the growth of the banking system in China. There's also been a slowing down in the trend growth rate of real output, unlike the incredible growth that China had in the 1980s, 1990s, and the early years of the 21st century. Much slower nowadays, and so is the growth of money. China, in fact, has had a rather troublesome 2018, with the authorities there wanting to dampen down the growth of debt and that then has meant the banking system also being held back a bit. But actually, the last year, 18 months, the growth of the quantity of money, only one type of debt, has actually been fairly stable, and the Chinese authorities have been trying to boost it in the last 3 to 6 months. The real problems for 2019, I think, have to be in the Eurozone. And let me just look at my crib sheet to comment on this in a little bit more detail. You can see that this chart goes back to 2005. Again, you see this plunge, time of the Great Recession. Then quite a long period of rather indifferent, rather weak growth of money in the Eurozone. This is really from about 2009 through to 2013, 2014, when indeed the Eurozone, unlike the United States, unlike Britain, unlike the rest of the world, had a second recession. Very mild one, but it had a second recession. And then you'll see this flip upwards in 2014-15 in money growth towards about 5%. That was the result primarily of the European Central Bank's asset purchases, the so-called quantitative easing program that they adopted rather later than the Fed and the Bank of England. And you can see then on the blue line there, this broad money growth pretty constantly at around about 5% until really, I suppose, early mid-2017, when it starts to tail away. Now, we've been worried about this for some time, that the European Central Bank has been cutting back on its asset purchases, and even late 2017 we were expressing concern about the Eurozone. There has been a slowing in money growth, there has been a slowing in economic activity as well. But in many ways, and if we look at a bit more detail, it's pretty clear something that's is happening. Last 3-month annualized growth rate M3 is only a bit over 2%. The ECB has said it's not going to buy any more assets from the start of 2019. We then have to expect that line to go even lower, down to perhaps even 1-2%, 0-1%, those kind of numbers. There is a risk of recession in the Eurozone again. Now, logically, one would expect if that does happen that there'll be a policy change. The difficulty in the Eurozone is what the policy change would be, because interest rates are already very low. They've conducted these asset purchases, and the asset purchases have favoured some countries, such as Italy, over others, such as Germany. Italy at the moment we had the new Italian government in May, after the May general election in Italy. It's squabbling with the European Commission about its budget targets for next year. I don't really see how the ECB can resume asset purchases in 2019 when there are plainly these different effects on different countries that are members of the Eurozone. And this has to be the focus of our concern about early next year. As I said, there really has been a slowdown in Eurozone growth. That has contributed to a wider slowdown in growth globally in 2018. I think we have to see this rolling on, also possibly getting worse in early 2019. In America, one of the saving graces has been that the Trump administration has eased regulation on the banks, enabling the banks to lend more to the private sector. Nothing of that sort is happening in Europe. I've got the UK here. We're close to the Eurozone, of course. You can see again, money growth is slipping away. We're not bothered by all these Eurozone ECB squabbles between the Frankfurt and Rome and Brussels and Berlin. We're not affected by that. However, we've also been seeing a fading of money growth in the last few months. And I have to say, it's disturbing. It appears that the Bank of England has been taking a leaf out of the Federal Reserve's book and actually been quietly selling off some of the gilts acquired in the QE programs 3 or 4 or 5 years ago. You can see, this is a chart of British banks' claims on the public sector. They went sideways for many years, then they surged from 2009, as you can see. reaching a peak of over £600 billion in the middle of 2017, August 2017. And then let's just look at what's happened. Slightly different set of numbers, but they're more or less the same thing. The net claims of banks on the British public sector since the middle of last year. And they've in fact fallen from 630 billion down to about 580 billion. That's quite a big move. It's 50 billion pounds. And that, to a large extent, not entirely, will actually come off the quantity of money. So that's one reason why money growth in the UK has been so weak. Japan, just going sideways. The Bank of Japan and all sorts of shock and awe statements about how it's doing things to help the Japanese economy. Actually, broad money growth has been flat at 2-3%, sometimes up to 4% for donkey's years. If anything, at the moment, slipping away. I wouldn't jump up and down about that either. But then let's look finally at India, and we can see that it's been like China. It had these extremely rapid growth rates of money 20 years ago, but then more recently coming down towards 10%, essentially stable at that kind of number. Again, despite all sorts of squabbles inside India, there's been at the moment the Indian government and the Indian banks and the central bank, because the banks believe that the central bank, the Reserve Bank of India, is being too tough on the banks about their bad loans. Anyway, now look, there's a lot of things to cover there, but I think what one can say as a generalization is that on the whole, money growth is weakening rather than strengthening, and this then implies that there'll be a period of beneath trend growth in world output in early 2019. The Federal Reserve in America, if it sees weakness in the economy, can change tack. So the European Central Bank, things more problematic for the reasons I explained. I would say a recession isn't necessary. It shouldn't be like 2009 and 2010. It shouldn't really be like what happened in the Eurozone in 2011, 2012, and so on. Shouldn't really be like that because inflation is so low everywhere. But, well, in other words, because inflation is low, the central banks can ease up. It shouldn't be a recession. And then finally, I'd say that low inflation should continue into 2020 and probably even into 2021. We live in a world of very moderate increases in prices. Thank you very much.